Ladies and gentlemen, it's a great pleasure for me to greet members of the press, my associates and colleagues. But today I have the special pleasure and honor to tell you something before we move on to the presentation of the inflation report. I would like to present to you the National Bank of Serbia through several figures. Because of all the indicators, we have decided to revise up our GDP growth projection for 2019 to 3.6%. At end September 2019, the NPL ratio equaled 4.66%. Foreign exchange reserves of the National Bank of Serbia equaled in gross terms 14.12 billion, of which, while net FX reserves equaled more than 12 billion. What I particularly want to emphasize is that within those FX reserves we have 30 tons of gold, of which 9 tons were bought in October for the first time, as far as I know, in the international market, and Serbia can now boast diversification of foreign exchange reserves across best quality assets, because this time, even though we hold all our gold in Serbia, these 9 tons are kept at the safest place at the Swiss National Bank, because we want these assets to be liquid, marketable, in case of any need to defend ourselves from risks stemming from the international environment. You probably already know that we had issued a 10-year Eurobond, and that we have achieved the interest rate of 1.25%, and that this auction was oversubscribed by 3 times. And while in June, at the same bond, we had the yield rate of 1.619%. For all those who do not believe that Serbia has transformed itself, that Serbia is not a country of a well-balanced economy and long-term sustainability, I will add one piece of data more. At end September, gross foreign direct investment equaled 2.9 billion euros, and we expect them to reach last year's record level of 3.5 billion, though there are significant upside risks, meaning that their amount could be even higher. The same upside risks we have when it comes to GDP growth, which means that it might turn out even higher than the projected 3.6%. So this is for those who are impatient, and now we are moving on to the formal part of the presentation. Now, when I see Vice Governor Dragana Stanic, I remembered that the citizens were quite worried about Banca Intesa, but Banca Intesa is finally in the IPS system because it migrated from its old and prior system to the new core system, which means that our instant payment system, whereby we are well known across Europe as leaders, is now present also in Banca Intesa. So this is good news for all of us. Since our last gathering in August, inflation has remained low and stable, and I have deliberately left this piece of information for this report because we have missed the target here, because we are below the lower bound of the target band. So though inflation is low and stable, it is below the lower bound, but I will tell you the reasons why this happened, and I will also tell you when do we expect inflation to return within the target band. Positive trends have continued, and economic investment and export activity have gathered momentum. Stepped-up investment deserves a special note, as it pushed GDP growth in Q3 beyond our expectations, prompting an upward revision of the 2019 growth forecast to 3.6% instead of the previous 3.5%. Given that domestic factors successfully compensate for the weaker external demand, favorable macroeconomic trends are expected to continue in the period ahead. Inflation is low and stable for the sixth consecutive year and is expected to remain so in the period ahead. Same as in the neighboring countries, lower contributions of unprocessed food and energy prices set the year-on-year inflation in Serbia on a downward path over the past months. In October, inflation measured 1% year-on-year. Since the start of the year, core inflation has hovered between 1.1% and 1.5% year-on-year, suggesting that low inflationary pressures are of a more permanent nature, despite positive trends in the labour market. According to our November projection, inflation will continue to move at low levels in the coming period, which is also confirmed by the inflation expectations of financial and corporate sectors for both 1 and 2 years ahead. As a result of the preserved macroeconomic and financial stability and improved business environment, investment remains the key factor of economic acceleration. Economic activity has been on the rise for 20 quarters in a row. In Q3 2019, GDP growth stepped up to 4.7% relative to the same period the year before. Given that external demand slowed down additionally, such growth acceleration is a signal of the rising contribution of domestic factors. The key factor of economic acceleration in Q3 on the production side was the construction sector, whose growth stepped up to around 35% year-on-year, owing to intensified works on the transport and energy infrastructure. Faster economic growth was enabled by the activation of earlier investment, which helped the manufacturing exports to pick up from 5% in the first half of the year to almost 9% in the third quarter of this year. Continued implementation of infrastructure projects, further improvement in the business environment, and favorable terms of financing gave an additional impetus to vigorous economic growth. Improvement in the business environment is also confirmed by Serbia's progress on the World Bank's latest Doing Business list by 4 notches to the 44th position among 190 countries. In view of the results achieved, we have revised our GDP growth forecast for this year from 3.5% to 3.6%, though there is a realistic possibility that growth might turn out even higher. Growth is expected to pick up further to around 4% in 2020 and maintain similar dynamics in the medium term, driven by investment, exports, and sustainably rising personal consumption. Consumption growth is also aided by the higher employment, owing to which the unemployment rate dropped to 10.3% according to the latest available data. Taking into account the upward trend in labour market participation, the data on formal employment gains, good agricultural season and robust construction growth, we estimate that in Q3 the unemployment rate could edge down to a single-digit level. Exports have stepped up, despite slackening external demand. Capital inflows to Serbia remain high. In the first 9 months of 2019, Serbia's goods and services exports went up by 10.9%, and those destined to the EU by 10.6% compared to the same period last year. The overall export growth rate thus stepped up compared to 2018, coming close to the import growth rate, which equals 11.6% year-on-year. Import dynamics is determined primarily by the investment cycle at home and the consequently higher needs for equipment and intermediate goods, which is connected with the high FDI inflow and partly also fueled by the rising consumer demand. On these grounds, the current account deficit will expand in the short run. But given that the imported equipment continuously increases export capacities of the Serbian economy, it is reasonable to expect that the deficit will decrease in the medium run. Since the start of the year, FDI inflow has reached 2.9 billion euros, covering in net amount the current account deficit for the fifth year in a row. Together with reduced internal and external imbalances, FX reserves, which reached the record 13.5 billion at end October, have additionally increased the resilience of our economy to potential adverse developments in the international environment. Just to avoid any mistakes, this is the end-of-month data. I told you 14.17 billion as at the 12th of November, so this is the latest data. I don't know whether it is because of the price of gold and the value of our securities, but there you have it. The values of foreign exchange reserves are oscillating on a daily level, but gold revolves around 1.3 billion euros, and these 10 tons bought this year are the reason for my warm smile. Favorable macroeconomic landscape is crowned by the elimination of fiscal imbalances, thanks to the full coordination of monetary and fiscal policy measures. I highlighted this during the annual meetings in Washington with the representatives of the IMF. I highlighted this as an advantage of Serbia because Serbia is one of the rare countries where monetary and fiscal policy measures are well coordinated, and this coordination underlies the results that we are presenting to you. As the previous 2 years, 2019 had seen a fiscal surplus which on consolidated level reached 0.9% of GDP, concluding with September. Central government public debt was reduced additionally to 52% of GDP at end September. It is important to note that these results have been achieved in conditions of significantly higher government capital expenditure, as well as increased outlays for wages and pensions, which contributes to economic growth while causing no major inflationary pressures. General government deficit plan for this year is 0.5% of GDP, which is also a medium-term target that will keep the public debt to GDP ratio on a downward path. No less important is the fact that the currency and refinancing risks are also reduced, supported by the last week's successful reissue of the 10-year Eurobond in the international financial market. The bond was sold at the lowest rate of return so far, 1.25%, which are the terms enjoyed by countries with investment-grade rating. The funds raised are intended exclusively for the repayment of the earlier expensive dollar debt, which means that this issue does not increase public debt, while it does reduce interest expenses. By lowering the key policy rate, we have provided further support to credit and economic activity. Additionally, weakened inflationary pressures, reduced internal and external imbalances, and the consequently strengthened resilience of our economy to potential negative impacts from the international environment, as well as the favorable macroeconomic outlook, have created room for further monetary policy easing. In November, the key policy rate was again cut by 25 basis points to 2.25%. Apart from domestic factors, this decision was also motivated by the monetary policy accommodation of leading central banks against a background of a slowdown in global trade and economic growth. We expect that the MBS's monetary policy easing will, as so far, lead to a fall in interest rates in the money and credit markets. Strong credit growth at favorable conditions gives significant support to economic growth. Favorable financial conditions in the domestic market are also evidenced by the lending interest rates, which in the dinar market fully mirrored the MBS's monetary policy easing. As for the euro index loans, favorable terms of financing were supported by the lower interest rates in the European money market, and to a greater extent also by the decline in Serbia's risk premium. The day before yesterday, Serbia's risk premium equaled 34 basis points. While we were preparing for this conference, the record level was the piece of information from the 7th of November, when the risk premium equaled 40 basis points. However, the risk premium hit another low several days thereafter. So those who claim that this is only because of the low euro area interest rates, I have to say that we have also provided a significant contribution. What I want to also point out is that Serbia is only a step away from investment grade, characteristic of economies offering high security of investment, which not only confirms the economic progress and the results achieved, but also contributes to further improvement of financing and investment conditions in Serbia. A decrease in interest rates, coupled with economic growth and positive trends in the labor market, gives rise to lending. The structure of lending is favorable in terms of support to sustainable economic growth, as evidenced by a significant rise in corporate investment loans and a rebound in household housing loans, with a mild deceleration in the growth of loans intended for consumption. While lending has recorded two-digit year-on-year growth rates, loans have a stable share in GDP, posing no risk to either price or financial stability. The reduction in the share of non-performing loans in total loans to 4.7% has created, that is 4.66%, has created room for further credit growth and at the same time reinforce financial stability. Ladies and gentlemen, dear colleagues, allow me to round off this part of the conference by concluding that the results achieved have been enabled by the full coordination of monetary and fiscal policy measures, which has strengthened the credibility of economic policy. This credibility is confirmed by the already mentioned rating upgrade, low risk premium, more favorable position of Serbia in the international financial market, as well as by the high FDI inflow. Such approach to the conduct of economic policy has ensured an adequate response to the challenges from the international environment, which the country will surely face going forward. In the period ahead, you can count on our full commitment to the safeguarding of the achieved stability, which, along with further implementation of structural reforms, will boost the competitiveness of our economy, as well as employment and the living standard of our citizens. I realize that I haven't told you another important piece of data, and this data relates to the increase in dinar savings, which rose from 17 billion in 2012 to 74 billion dinars at end September. Yes, dinar savings are rising, and so are euro savings. The increase in dinar savings is more significant, which is the best recognition of stability and the policy that we are implementing. Now I hand over to the General Manager of the Economic Research and Statistics Department.
Thank you, Madam Governor. We shall now present our new projections regarding inflation, economic activity and other key macroeconomic indicators. It is already certain that the year 2019 at a global level will be marked by a significant slowdown in trade and economic growth due to the rising protectionism and uncertainty in terms of future trade policies of leading world economies. The relevant international institutions have once again revised down their global growth estimates, including the estimate for the euro area, Serbia's key foreign trade partner, noting that global growth will nevertheless pick up gradually in the coming period. Unlike in the euro area countries, growth in countries in our region, which are also Serbia's important trade partners, remained largely unchanged owing to increased reliance on domestic demand, which has been accounted for in our new projection. Also, our new inflation projection takes into account the lower inflation projection in the international environment, notably the euro area, and consequently the weaker pressures on account of import prices. An impulse to global growth is expected to come from increased accommodation of leading central banks' monetary policies going forward. The September package of the ECB's expansionary measures, which includes the renewal of the asset purchase program, is the largest in 3 years. The Fed also continues to pursue an expansionary monetary policy by trimming its federal funds rate and increasing its balance sheet via interventions in the money market. This should translate into more favorable terms in the international financial market, which we took into account when drafting the projection. Still, it remains uncertain to which degree the future moves by leading central banks will differ from market expectations, which mandates caution because of its possible impact on global capital flows. As for the international commodity market, uncertainty regarding future developments pertains primarily to movements in the price of oil. After rising in mid-September, the global oil price declined, and in October it went below $60 per barrel, meaning it was around 7% lower than 3 months ago. In accordance with futures, our new projection assumes slightly lower oil prices in the global market relative to 3 months ago. Given the instability of global supply and demand, the price of oil is equally likely to move either way. Based on futures, we drew the assumption on movements in the prices of primary agricultural products, where we anticipate a somewhat greater fall this year, followed by a higher rise over the next 2 years relative to the previous projection. Contrary to uncertainty in the international environment, domestic conditions for monetary policy implementation were characterized by continued macroeconomic improvements underlying our projection. Despite conditions that include significantly higher government capital expenditure and increased wage and pension outlays, we had a surplus in the consolidated budget in excess of 35 billion dinars in the first 9 months of the year. Owing to eliminated fiscal imbalance, the share of public debt in GDP decreased to 52% at September and is expected to remain on the downward path going forward. Our projection assumed that the character of the fiscal policy will be mildly expansionary over the projection horizon without major pressures on inflation growth. The projection assumption includes a stable external position in the coming period as well. We estimate that this year's share of the current account deficit in GDP will remain similar to last year's and gradually decrease over the coming years. Investments channeled to tradable sectors, as well as the gradual recovery in external demand, are likely to speed up export growth in the period ahead. Owing to the continuation of the investment cycle, we expect to see increased import of equipment and intermediate goods, while the improved living standard of citizens and rise in consumer demand will lead to a moderate rise in the import of consumer goods. We expect this year's FDI to reach the level from last year, and that their net amount for the 5th consecutive year will more than fully cover the current account deficit. That deficit will be more than fully covered by FDIs is our expectation going forward as well, and is the continuation of good investment diversification leading to further growth in the country's export potential. Balanced public finance and the country's stable external position are reflected as a fall in the risk premium and improved credit rating, which is conducive to relative stability in the foreign exchange market. Appreciation pressures, which prevailed in the previous period, continued on, and the MPS intervened to ease excessive short-term fluctuations of the dinar exchange rate to the euro. Since the start of the year, the MBS bought 2.5 billion euro net in the foreign exchange market, thus building up the country's foreign exchange reserves. Consistent with our projection, the costs of government and private sector financing are still relatively low. The key policy rate was trimmed for the third time this year to 2.25% in November, which is its lowest level in the inflation targeting regime. We anticipate that the MBS's monetary policy easing, coupled with the country's low risk premium, will reflect positively on financial conditions and a further decline in interest rates. Lower costs of financing will support the further rise of lending and, in turn, growth in investment and overall economic activity. Domestic drivers of economic growth helped speed up economic activity in Q3 more than we anticipated. Estimated GDP growth is 4.7% year-on-year. Growth is driven by construction, services sectors, and the expected recovery in manufacturing, and on the expenditure side by investments and improved foreign trade balance. Economic activity will most likely maintain the relatively strong dynamics in Q4. Therefore, we expect GDP growth to reach 3.6% this year instead of the previously expected 3.5%. Investments are still the key factor of economic growth, owing to the ongoing realization of infrastructure projects and private sector investments attributable to the improved business climate and favorable sources of funding. Investment growth spilled over onto other components of GDP. We recorded a further increase in household consumption, mainly owing to positive labour market developments and lower costs of borrowing. On the other hand, the investment cycle in the country and the associated equipment import, as well as the further slowdown in external demand, are yielding a negative contribution to net exports, though lower than in the first half of the year due to the accelerated rise in manufacturing exports. According to our projection, we expect GDP growth in 2020 to accelerate to around 4% and maintain similar dynamics in the medium term on the back of investments, export, and a sustainable rise in household consumption. Risks to the GDP projection in the medium term are judged to be symmetric, with risks emanating from the international environment being estimated as tilted to the downside and those arising from the domestic environment to the upside. Having reached the central midpoint in April, year-on-year inflation slowed down to 1% in October, responding to the lower prices of vegetables and petroleum products. Core inflation is also low, measuring 1.1 in October, which is slightly below the level at which it's trended since the start of the year. Low inflationary pressures are also indicated by expectations of the financial corporate sectors, which are trending in the lower half of the target band in both short and medium term, in accordance with the MBS projection. According to the November central projection as well, we expect year-on-year inflation to remain low and stable until the end of the projection horizon. Until mid-2020, it will hover around the lower bound of the target tolerance band, only to come gradually closer to the central midpoint thereafter. In the short term, this will be facilitated by the low base from the prices of vegetables and administered prices, and in the medium term by rising aggregate demand. The current inflation projection until mid-2020 is lower than the August projection, mostly because the fall in vegetable prices in Q3 was greater than expected. This drove the inflation projection down until the middle of next year and increased it thereafter due to the low base effect. Uncertainty surrounding the inflation projection is associated primarily with movements in international commodity and financial markets and to the rise in administered prices. Taken together, the risks to the inflation projection are judged to be symmetric. Allow me to take a brief look at our inflation projection that was presented in November 2018, because this is the monetary policy horizon, namely the period in which its full effects on inflation become evident. As you can see, until the middle of this year, inflation moved in line with the projected central level from a year ago, while in Q3 it was below that level due to a sharper decline in global oil prices and slower growth in administered prices than anticipated a year ago. Global oil prices were lower by around 20% than we assumed 1 year ago, according to futures. Hence, the prices of petroleum products at home were also lower, as was their contribution to inflation. Administered prices also yielded a lower contribution, as their growth in Q3 was more modest, 2.1% year-on-year, than what was assumed in the November 2018 projection. To conclude, I would like to remind you that inflation in Serbia is low and stable, averaging 2% in the past 6 years, which is the level of inflation in advanced countries. In the period ahead, the MBS will continue to maintain efficient control of inflation and inflation expectations, as this is the best way to preserve the confidence we have built up, as well as the efficiency of our monetary policy. Lastly, I would like to emphasize once again that the November inflation report contains 5 text boxes covering current topical issues. The first one presents the current trends in lending. The second text box analyzes the trends and growth prospects of household consumption going forward. The third one focuses on the rise in Serbia's export, which is high and diversified despite a slowdown in global demand. The fourth text box analyzes positive labor market trends at home. And the fifth text box looks into the new monetary policy measures by the ECB and Fed and their potential impact on Serbia. Thank you for your attention. I would like to ask a question to my colleague Mirjana Miletić to answer one of the rare questions. Lending is rising, but not according to the economy. Now, Mirjana will explain to you that it's not like that, but to the contrary, and that we are leaders in the region in this aspect.
Thank you, Governor. I will now present to you one of the text boxes from this issue of inflation report, and it concerns lending activity and the underlying factors. Positive trends in lending activity have been in place since 2015, and in the first years, the greater contribution to lending activity came from the household segment, but recently, since the second quarter of this year, greater positive contribution to lending is coming from the corporate segment. According to the latest available data for September, year-on-year lending growth in the corporate segment equaled 11.6%, while household lending growth equaled 19%. So overall, private sector loans rose at the rate of 10.4%. So even though we are talking about two-digit lending growth rates, what we want to emphasize is that this lending growth is not bears no risk when it comes to price and financial stability. The share of loans in GDP is relatively stable, which means that lending activity is growing consistent with the growth in key macroeconomic fundamentals. So there are no risks to price and financial stability on this account. What we want to emphasize in particular is that the positive trends in lending activity are aided by the effects of monetary policy accommodation by the National Bank of Serbia, because this has lowered the cost of borrowing for the private sector, as well as by the lower interest rates in the euro money market. But as the Governor already pointed out, what also provided a contribution was Serbia's risk premium, increased interbank competition, and the acceleration of economic growth and favorable trends in the labor market. The structure of lending activity is favorable also from the aspect of providing support to sustainable economic growth, and this is evidenced by the robust growth in investment corporate loans. And you can see this in the chart on the previous slide. On the left-hand chart, investment loans are providing the greatest contribution to corporate loan growth. In September, they grew at the year-on-year rate of 27%. When talking about household loans, we can see that the key contribution to growth is coming from loans intended for consumption, but we see also an increasing contribution from housing loans. What we also want to particularly emphasize is that the measures enacted by the National Bank of Serbia late last year did not constrain lending activity. Their aim was to ensure adequate coverage from potential risks that might stem from unsecured non-purpose lending at unreasonably long maturities. So we did not want to constrain lending activity, and these measures yielded their full effects. When it comes to factors contributing to lending activity, the National Bank of Serbia, in regular quarterly dynamics, is implementing a bank lending survey. And what banks tell us is that both demand and supply side factors contribute to lending growth. A somewhat higher contribution is coming now from demand side factors, but this is primarily due to the acceleration of economic growth and positive trends in the labor market. This indicates that, based on banks' responses when it comes to demand for loans, is that capital investment is also pointed out as a significant factor contributing to the growth in loan demand. From 2015, when the investment cycle gathered momentum, investment loans started to produce an increasing contribution to lending growth, which means that bank lending was one of the significant source of financing investment. When it comes to supply-side factors, that is, credit standards, the easing of credit standards is supported by favorable terms of financing, owing to monetary policy easing, lower country risk premium, lower interest rates in the euro money market. Competition among banks is also recognized by banks as a significant factor contributing to the easing of credit standards. We also want to underline that when it comes to non-performing loans, according to banks' responses, non-performing loans are no longer a factor that works towards tightening of credit standards. Now it is one of the factors that contributes to the easing of credit standards. In a nutshell, I would like to tell you something about private sector financing. According to the latest available data for September this year, interest rates on new dinar loans to corporates equaled on average 4.4%. So relative to the start of monetary policy easing by the National Bank of Serbia in May 2013, this interest rate is lower by 12 percentage points. When it comes to the household segment, this interest rate equals 9.6%, and it has been at a single-digit level since May this year. And relative to 2013, it is by 11 percentage points lower. This indicates that the key contribution to the lowering of interest rates in loans to the private sector came from the monetary policy easing of the National Bank of Serbia, while an additional contribution also came from stepped-up competition among banks. When it comes to interest rates on euro-indexed loans, as the Governor already noted, the contribution to the fall in euro-indexed loan interest rates did stem from lower interest rates in the euro money market. Euribor, 6-month Euribor in May 2013 equaled 0.3%. Now it is in the negative zone, so it did provide a contribution. But a greater contribution came from Serbia's risk premium, which, for instance, in May 2013 equaled 340 basis points, while now recently it has fallen below 50 basis points. The Governor said 2 years ago the risk premium equaled 34 basis points. So euro-indexed loans to the corporate sector in September were approved at the rate of 2.6% and to households at 3.8%. So this rate was lower by 4.7% and 4.3% respectively relative to May 2013. Having in mind the factors that contributed to the growth in lending activity and favorable terms of financing, continued lending growth can be also expected in the coming period. But what we also want to underline once again is that this lending growth poses no risk to either price or financial stability. Thank you, Mira. Milane, could you please tell us whether the increase in wages and consumption is sustainable in economic terms? Because a question often arises, you have a brain drain and the salaries are low. Our President Vučić is saying, why are you increasing wages? Please tell us that the growth is sustainable and consistent with GDP growth.
Thank you, Madam Governor. Please take some time to take a look in this text box where we wanted to respond to the issue of the contribution of personal consumption to GDP growth and to reply to the question as to the sustainability of personal consumption. First, how high is personal consumption in Serbia and how is it financed? So personal consumption at the annual level is around 30 billion euros. The key source of funding for personal consumption, so where do citizens find funds for this, are salaries in private sectors. The fund of the personal sector wages is around 45% of all in Serbia. Then we have the personal pension bills and then the private public sector bills. We also have remittances and credit growth, whose share is somewhat smaller. So how will the personal consumption grow this and next year? According to our estimates, this year we can expect a real growth rate of personal consumption of 3.3%, which is slightly slower than the growth of overall GDP, which is 3.6%, which is our current projection, while for the next year we anticipate a 3.6% rate of personal consumption, which is again somewhat slower than the GDP growth. And this will enable the fall of the share of personal consumption in GDP and make room for the growth of investments. So the key point in this text box, when you take a look at the sources for personal consumption growth this and next year, you can see it in chart 14, around 2/3 will come from private sector wages and 1/3 from public sector wages and pensions together. So 2/3 will be determined by growth in wages in the private sector and only 1/3 from public sector wages and pensions. Perhaps a few more words about, if the governor allows, regarding export. This is another text box that we have prepared. So this text box relates to growth in Serbian export in terms of euro area slowdown, because the public has been concerned with this. Serbian export at present and in the coming period. When you take a look at the euro area, its growth slowed down to only 1.5% relative to 1.9% last year. The negative effects for Serbia, yes, there are some. Serbia is not an island. Especially, we have effects in car and steel exports. But despite this, in the first 9 months of the year, Serbian exports rose faster than last year. Specifically, goods export rose from 8.3% to 8.9%. And services from 14.4% to 17.4%. So Serbia's overall exports will reach this year around 24 billion euros, which is an increase of almost 3 billion euros relative to last year. As for prospects going forward, under assumption of euro area growth of 1.1% and assuming the current investment growth in Serbia, Serbia can have a growth in goods and investments and services exports as well next year, a two-digit growth. We also have this upside risk, both last year and this year, and this means that the investment growth is faster than the projected one. When we say investments, and I will conclude with this slide, the reason why we don't have a slowdown in exports, despite despite a slower growth in euro area, is investments in export-oriented sectors. As you can see on chart 11, around 3.5 billion euros, which was our inflow of foreign direct investments last year, 2.2 billion euros were channeled to tradable sectors, especially manufacturing. Of 2.9 billion euros this year, in the first 9 months, 1 billion and 300 million were channeled to tradable sectors and 900 million to manufacturing. In 2018, Serbia attracted more than 50%, and this year 60% of all FDI in the Western Balkans. As a result, Serbia is the only country in the Western Balkans at this moment whose exports in 2019 rose faster than in 2018. In other countries, it rose at a slower pace, and the same situation we have in Central and Eastern European countries. I would like to conclude with this. How about investments in GDP? What happened since 4 or 5 years ago? Now we have, how shall we reach the level of 25? This is a frequent question we are being asked. We were asked this question for the first time 4 or 5 years ago when investment share in GDP was below 18%. Meantime, this question continues to arise. But it seems to me that the dynamics at which fixed investments grew in the previous years is disregarded. In this period, the share of fixed investments in GDP increased from below 18% to almost 22%. This year, fixed investments will rise at a rate of 10.3%, and their share will most likely reach the level of 23 or 23.2% of GDP. This is still not the level of 25, 26%, which is usual for Central European countries such as the Czech Republic, but we can say that we have covered more than half of the way to this level of investments, and this is why we don't have a slowdown in exports, which is experienced by other countries in the region. Thank you, Milan.
We try to answer all questions that are asked frequently. I will add another question, because you're shy. Since inflation is below the lower target bound, and this is where we have missed the target, the question that often arises is whether we should lower the target because inflation is running so low. At one point, we decided to lower the inflation target from 4 plus minus 1.5% to lower it because of convergence towards the EU as our main strategic goal, to lower it to 3 plus minus 1.5%, and this target is applicable until 2021. And we have no intention to adjust our target to the circumstances, because we don't want to achieve our goals at any cost. We want to have inflation which is no impediment to economic growth. We want to have an inflation that supports economic growth. So I wanted to answer this question that arises often not only in Serbia but also in other countries, though in the opposite direction. So I wanted just to say that we have no intention of changing our inflation target that has been established together with the government and that applies until 2021. So our target is 3 plus minus 1.5%. Now I want to tell you when do we expect inflation to return within the target band. This target undershooting does not bring into question the credibility of monetary policy. Quite to the contrary, well-anchored inflation expectations for both 1 and 2 years ahead speaks in favor of the credibility and effectiveness of monetary policy, which supports economic policy of the government, also as one of our objectives, legally mandated objectives, along with price and financial stability. Please, if you have any questions, feel free to ask them. It took us a bit longer, but we have to go into details. And this is just a small segment of our operations. And we are only a part of a larger team of people who are producing the inflation report. Many of the members of our team are not here with us. The National Bank of Serbia is a large system, but I always want to recognize the merits and contributions of each and every person. Aleksandra Stojilkovic, Pink TV, you said that you have increased the GDP growth projection despite the challenges from the international environment, the slowdown in the global economy. What was the key domestic factors that pushed GDP growth? Because it was the previous target was disputable, and people wonder whether we are going to reach this growth rate. So, what was the key factor that motivated you to revise the GDP growth projection up? I will tell you one of the details from the negotiations with the International Monetary Fund during their last visit here. Even though we have continuous cooperation, and even though we often discuss data and we help them put together an overall picture of the Serbian economy, even they were a bit concerned because of the slowdown in the euro area economy, and they were wondering whether we are going to reach the projected GDP growth rate, and they wanted to lower the GDP growth projection. And at the time I asked the mission chief whether anybody believed that Serbia, at times of fiscal consolidation and implementation of most stringent austerity measures, that Serbia would record growth. And yet we did record growth. And in the same way, I believe that we're going to reach 3.5%. I asked him whether he's ready to risk his credibility and lower the GDP growth projection for Serbia, and to then find himself in a situation to justify himself at the end of the year. He said, I will think about it. They maintained their projection at 3.5%. Our associates invested huge efforts in Brussels and in all other forums and roundtables to defend our GDP growth projection. And this was not only our optimism. Data, which are a result of the diversification of investment, markets, trade partners, sources of growth. This is the result of our security, and this is why today we are able to raise the GDP growth projection from 3.5% to 3.6% with significant upside risks. This means that we did not rely only on one market, and that we did not wait for the hard times to diversify and to look up for different partners and new markets, regardless of whether we are talking about portfolio investments or real sector investments. But what I want to underline is, and I will always repeat this, everything we do it for the people and with the people. The people we work with, you can see them here. I'm talking about coordination of monetary and fiscal policy measures. I'm talking about joint objectives of fiscal and monetary policy. Many countries nowadays do not have this coordination. They do not have the same goal. Everything loses meaning if the people living in Serbia do not feel the benefits of economic growth. The reasons for our upward projection revision lie in the sources of consumption that Milan explained. Consumption is rising on sustainable grounds, and that is why we have supported the fiscal strategy that the government has put through in the National Assembly, because we know that consumption, not only investment consumption and investments in infrastructure, but also personal consumption, give a significant contribution to economic growth, which is undisputable. And very often when I go to conferences abroad, they say, is it possible that without any social unrest, at times of fiscal consolidation and such austerity measures, you managed to reach such growth rates? Yes, we had 5 election cycles, I tell them, but we did not resort to any populistic measures. We did not want to be liked. We do our job responsibly, in the same way as the people from the government do it. We do not enact measures that will be liked by the broader population. We do not easily succumb to anybody's advice. The people elected us. The people chose us to work in their interest and not to work in the interest of specific individuals or interest groups. This self-respect that we have while we are working and while we are committed to Serbia's progress is something that gives us the strength to defend the 3.5% GDP growth projection and the revised projection of 3.6%. The sources of consumption lie in private sector wages and public sector wages and pensions. We were not set any benchmark, any reference value. These jobs, these activities are done once in a lifetime, and you do not have the right to fail. If you are raising salaries, you have to have longer-term sources. If you increase pensions, you have to have longer-term sources which are reflected in domestic and foreign investment. Out of 23 areas of manufacturing, we have growth in 16 areas. And this happens in the hardest of times when you have a slowdown in economic growth in other countries. We have a slowdown in the exports of cars, but this is fully compensated by the exports of car components, because we were thinking about this on time, since Fiat became a ripe investment bound to face a fall at one point. And the state as a whole did not wait for the problems to arise. We were proactive, and we are doing it in this way, in the same way today. We are looking at projections of lending activity, sustainable sources of growth, everything. Let me go back to your question. Diversification of the sources of financing of our trade partners and markets. This is my answer. And an undisputable contribution comes also from foreign direct investment. The southern Turkish stream is also an important investment, likely to contribute significantly to infrastructure and the construction industry. This is only one of a number of investments, and only one of the markets, only one of our partners. Because, you know, whenever there is a problem, currently the trade war between China and USA, many people say that India will benefit from this. We do not wait for this. We are trying to forge Serbia's path on our own and to be proactive. And as you can see, we are successful in doing so. The 3.6% GDP growth projection is fully justified. We were not over-optimistic as some other international financial institutions that talked about the 7% growth. We're very serious, and our projections are based on data. I apologize for taking too long, but
on the inside of Serbia, we are its greatest strength. A question regarding gold. I love this question. So far, as a state, as a country, Serbia As for the data that we have at the MBS, Serbia sold gold abroad and purchased around 1 ton of what the Bor mine offered. There are various topics that are not to be talked about now, but for instance, how was gold sold since 2000 and so on. We shall see about those stories, whether they are founded or not. But it's important to tell you that since the moment when I came to the National Bank of Serbia, every gram of gold offered, every gold bar produced in Bor, we purchased at the stock market prices. We bought it, paying for it in dinars, and we reached the value of, until October 9 this year, of 21 tons of gold. A little over 1 ton we bought from Bor, from the new owner, who also offered it to us first. But in the international market, for the first time, we purchased 9 tons of gold, and now we have 30.4 tons, which in FX reserves means 10%, 9.8, because the price of gold fluctuates almost daily. What I would like to stress is that since as for net FX reserves, so what the country has at its disposal, 6.6 billion from 2012. Now we have, as much as we had in 2012, now we have reached almost 12 billion net of FX reserves of the country. So we have almost doubled this amount. The composition of FX reserves is such that gold is 10%. It used to be 7% until this purchase in October. When we did it, I can now tell you, through a renowned international institution, it's BIS Basel, Bank for International Settlement Bank, the most respected bank, where Serbia is having 1 ton capped, 1 ton of gold capped. That's a remnant from the past, and the remainder of gold of FX reserves is in currencies, in a way to guarantee high security, just like we are restructuring the public debt by increasing its dinar share, and in euros, because we can affect this ratio, and we are lowering the value of the debt in dollars. So not only FX reserves as a source of safety, but also restructuring public debt is also a source of security, and the lowering of the price of this debt is part of our policy. For now, 10% is what I would say is a satisfactory amount. For instance, in 2001, Serbia had 23% in gold, but it's not that it had a lot of gold, but quite low FX reserves. And today, in total gross FX reserves, we have 2 billion of liabilities to banks. All the rest is FX reserves of the government with which the National Bank of Serbia disposes. We have succeeded by, after managing lots of analysis, we managed to purchase gold at favorable prices without making any market fluctuations. We had exquisite cooperation with people at BIS, and for now we don't plan to buy any more. 30.4 tons is quite enough, quite a large amount, but we shall see, depending on how things unfold in the world globally, and perhaps we might buy some more. Because the gold that we have can become a part of the investment portfolio on which you can make money. It's not what you call debt capital. It is part of the reserves, and reserves are not to be used in many creative ways, although there are some people like that in Serbia who would want to do such a thing. But this is something that we can actually earn some money on. So we waited for this opportunity to tell you this. There have been many questions, and I must admit that on October 11, when we completed this transaction with my associates, and this gold is recorded as a gold bar with designation. It's a bullion, gold bullion, yes, as a just like you have banknotes with the national designations. I sent a message to the confidential letter to the president, notifying him about the conditions and the price of this transaction, and telling him that Serbia is now a much safer country because it has 30.4 billion of tons of gold, 30.4 tons, 1.3 billion euros. This is the value of that. He haven't had an opportunity to tell this publicly. He left it to us, but I think that this is the success of all of us. Some sold their gold, but we are buying gold today. We are buying euros, and since 2017, we bought more than 5 billion euros via interventions in the FX market to make sure the dinar doesn't get too strong. And they say that the dinar is too strong. I don't know what the benchmark value is. They say export isn't growing, but you have heard the data. I cannot understand it any other way. Around 395 million euros. This is the stock market goods. Just like we pay for the gold to BOR, we pay for it in the international market. But these 3 days, what can I say? They were really, they were full of suspense. We were monitoring the price of gold going up and down, and we were trying to buy it at the most favorable price. For 1 ounce today, $1,452 for 1 ounce, but we bought it for a price of 1,450. 0.2 per ounce. We are satisfied with the way things ended up. The price isn't a secret. The average price for 1 fine ounce was 1,503 American dollars. The average weight of the gold bullion is 406.8 ounces. That's 12.6 kilos. You can come to the National Bank of Serbia and hold it in your hand to see how heavy it is. It is exquisite gold, very marketable, which could be sold quickly in any emergency, but I don't expect this to happen ever. And anything else you would like to know? Why did you decide to leave it in the Swiss bank? If it remained in London, we would cover the storage expenses. In Switzerland, we don't need to pay for these expenses, but we decided to keep this 1 ton there because of the liquidity element that I spoke about. Transporting gold to Serbia is an expense. Our vault has room for that, but we're counting on these 9 tons to be available over there, you know, like a wallet, not a locked box, but like a wallet. We have 20 tons here, 1 ton in Basel, actually 19 tons here, 1 ton in Basel. So this is part of the diversification I was talking about, the spatial diversification, the aim of which is to be more easier for us to do things with it in the future.
99.55 to 99.99% is the fineness of the purchased gold. On average, we're talking about 709 gold bullions of the highest fineness. My question relates to inflation. Since inflation is below the target, and it has been running below it for several months, are you talking about any other measures independent of the key policy rate whereby you could return inflation to the target midpoint? Or is it, does it matter to you that inflation is within the bound? Since you said that you have convinced the IMF to maintain their GDP growth projection at 3.5% for this year, did they find the information that the Serbian Statistical Office no longer publishes the flash estimate of GDP growth? Was that convincing for them? I will answer your second question, and Savo will answer your first question. You're asking me whether it was convincing for the IMF that the Serbian Statistical Office no longer publishes the preliminary estimate of GDP growth. I'm convinced that Serbia has recorded significant progress in many fields because specific institutions are covering their part of the job, and at the same time they do not feel isolated within the state. And I do not allow this to happen within the National Bank of Serbia. No department within the National Bank of Serbia can feel that their activities are important. We are a whole. But considering the good cooperation we have had with the Serbian Statistical Office, considering the reputation of the Serbian Statistical Office within the Euro system and Euro statistical institutions, even if I asked, if anybody asked the question from the IMF and they didn't, I would never dare answer those questions instead of Mr. Kovacevic and his associates, because this is something that concerns them. International methodologies are applied by the Serbian Statistical Office just as they're applied by us. And now, when the figures are good enough, we're going to ask whether they're real, whether they're realistic. Do you remember when we changed the methodology of foreign direct investment? There comes a time when you have to, because of harmonization with international standards, when you have to change methodologies and when you switch from old to new methodologies. And we changed the methodology not because we wanted to, but because of the estimate of unemployment and employment. And this raised many questions, and many people were wondering whether something is being done here that is not legitimate. No. At some point you have to do some measurements that have to be delayed in order to be reliable. I was looking at the figure of 35% growth in the construction industry, and I was wondering whether the Minister of Construction is going to take this amiss, because maybe she has a higher figure. We can publish only reliable data, and I can publish only 35% growth in the construction industry. Maybe this figure will be revised upwards, but the reasons why the publication of this flash estimate has been postponed does not arouse any doubt in me, but gives me reason to be patient. And this is why I'm confident in announcing the 3.6% GDP growth projection. You remember the whole issue with exchange rate losses because of the accounting regulations and the change in accounting regulations. We had losses in the corporate sector because negative exchange rate differences had to be disclosed in 1 year. And this type of deviation is not unknown in the field of measurements and statistics. We remember all how we revised the GDP growth revisions, and several months later the growth rate, you have said, Ivan Nikolic just gave us an explanation. Before I give the floor to the General Manager of the Economic Research and Statistics Department, I will tell you exact data. What gentlemen from the Foreign Investors Council say is that there are 120 of us, 35 billion euros has been invested into Serbia. You know what I lack. Even just corrected me in terms of value added and the value of executed works. I don't have the information whether this is charity or earned profit. Is investment in Serbia something that makes money? You're opening new jobs. 709 million euros has been paid out in dividends. People come here to make money, to work and to make money. I'm not dissatisfied with this figure because 56% of earned profit has been reinvested in Serbia. But let us speak about the overall picture, and I will always be patient in waiting for the data of the Serbian Statistical Office, because you can tell anything to Miladin Kovačević and discuss anything with him, but he will never construct and manipulate data. And I can guarantee this. My long-standing cooperation with him attests to this. Okay. When it comes to inflation, of course, it is important for us to keep inflation within the target tolerance band. But as the governor highlighted, since early 2017, our inflation target is set at 3 plus minus 1.5%. What I would like to highlight is that since we changed the target, if we take a look at the entire period, inflation averaged 2.4%. So inflation has been within the target band during that whole time, and only 5 months during these 3 years it was not within the target band. So it is important for us to keep it in the target band. Our key policy rate cuts will definitely yield its full effect in the coming months. Because the effects of monetary policy measures come with a lag, with a one-year lag. We expect inflation to approach the lower bound of the target band by the end of the year and to enter the target tolerance band already next year. What I also want to highlight is that this year we had a temporary effect from vegetable prices. They had a sharper fall from April. Our inflation peaked at the time, and the structure of inflation, the decrease in inflation from April to October was driven by vegetable prices. So we expect our measures to yield full effects with a lag, and from April and May next year we will again be in the corridor.
The transmission effect of the stronger dinar, how much is it dinar's appreciation affecting the inflation rate? Thank you. May I just add something? Does this imply or imply that depreciation would push inflation? Because if that's what you're implying, no, we won't resort to this measure. No. If depreciation would push inflation, because between inflation within the target and stability of the exchange rate, on which investment stability, business predictability is based, you have no room for choice. You really touched me now. We are all doing towards enabling an average price of 500 euros. So I have to prove this claim of yours, this assertion. Of course, this is under quotation marks. Go ahead, Nicola. Thank you. I would like to add that the relative stability of the exchange rate in the past 7 years is something that has contributed to the stability of inflation on low and stable level comparable to advanced countries in Europe. As for figures and the transmission effect on inflation, when we had a depreciation period, it was around 0.4 to 0.5. Transmission on inflation, you have to take into account that the asymmetrical effect was present, and it was milder when we talk about the appreciation effect on inflation. So only to confirm what the governor has already said, there's no room for apprehension as to appreciation pressures affecting inflation. And it's the stability that has contributed and made it possible that since August 2012 until end 2013, we lowered the inflation to 2% from 12.7% in 2012 to almost 2%. There are no excess questions. How do you interpret, since the key policy rate is at its historical low of minus 0.55%, so are domestic sources of financing more attractive to banks than the relatively cheap money from across the border? How do you interpret the fact that deposits here are still more attractive, although the interest rates are higher? First of all, it depends on the policy pursued by a certain parent bank and the subsidiary bank in Serbia, because we are talking about banks which are foreign banks, I could say that. Mostly, the policy of banks is that banks have their own sources of funding, that's deposits, and that the major part of their lending activity is based on sources of funding collected here. On the other hand, this low level of money, I have said it before, we didn't benefit a lot from this cheap money around us, because when you take into account what we call cross-border loans, lending parent company, by parent companies lending to their subsidiaries in Serbia, they don't, even to their associated entities, they don't even give them, lend them money under 1%, but 4, 8, and 12% it was at the time when this interest rate from the domicile countries ranged from between 0 and 1%. So why are we often under the scrutiny of our FX international relations department? They say that we engage in these loans more than we should, but it is the task of the National Bank of Serbia to have a comprehensive view, not just to pay attention to one sector or to one issue, one industry, one branch, or one source of funding, or just to look at banks and insurance undertakings. It is the task of the National Bank of Serbia to always have in mind the entirety, the wholeness of the balance of payments, because this balance of payments depends to a great degree on the sources of funding and the price, the costs for financing corporate activities in Serbia, including the banking sources you are talking about. So everyone is expecting that we, because we are a small and open economy, that we allow everything that someone else wants or that suits someone else or that enables someone else to make profit just because that company is coming to Serbia to make profit. And we welcome them, but not at long-term detriment of our economy and our people. So this benefit from cheap prices, do you know who feels the benefits? Those who have 6-month Euribor plus margins. The margins have fallen from the sources to the specific loans, mostly with banks. But that was a result from competition, mostly, than the fact that outside sources have become cheaper. In Serbia, I would like to stress this. We are not keen on allowing zero-rate floor just because we need to preserve domestic savings, because if you allow these things under an excuse of favorable financing, this will turn into a low price for holding sources of funding. This is the way Germany is defending itself from making interest rates, from having savings with no interest rates, or to have savings at an expense, meaning that whoever has savings is paying for that, which I also think is meaningless, that your money is spending and not earning more money. the interest rate can be lower, but just holding money, holding this kind of asset cannot pose an expense for you. So I'm personally still flabbergasted, and we are doing an analysis. Why are the indexed loans greatly present, and this type of hedging? So only those who have euro sources, have exports, and borrow, and not because we have issues in ensuring working conditions in the international market. You can see that we have reserves, we talked about it, but the balance for the country in terms of lending and sources of funding, the surplus of spending as much as you have and not beyond that. So we have to do something that is up to us individuals, both citizens and banks. We all have to rebalance our books to make the business sustainable. So we don't have answers to all the questions. We are always engaged in the analysis. But why do we have more euro index loans in Serbia? And this isn't a small concern for us. We need to maintain credit growth. On the other hand, we need to limit, like we said, when we limited cash loans that went up to 12 years. Now those up to 8 years are an exception. There are those who don't like this, but whoever wants to lend under with these maturities, they just have to provide adequate reserves. We don't want citizens to pay the costs of this risk, only to allow someone to make a profit by having this part of the market cake to fit their needs during one mandate, one term of office, or to have a bonus from their management or things like that. So we have limited it, but we haven't banned it altogether. In the same manner, we are doing something regarding the euro index loans because we want to establish this kind of balance, just like the country, that the state has it in its books, so to speak. We want to have it at the system level, to make sure that in times of crisis, we are not faced with this problem. Maybe this isn't the most precise answer, but nobody has the most precise answer to this question. A very famous banker has told me, I don't even know why my clients want euro index loans when they can have it in dinars at all. And when I ask them, they don't have an answer to that question, as if they don't want to meddle in speculation or unpredictability. But there can be no talk of unpredictability when you have 6 years of inflation at an average of 2%, and if you have the relative stability of the exchange rate, where really the oscillations are such that there are no reasons for concern. Still, you know, the sociology isn't mathematics, it isn't chemistry, it's a type of social science, and there's a lot of behaviorism where you simply don't have rational explanations for how people behave. But we will continue to struggle on to increase the share of dinar loans and make it higher than the stock in euro loans.
So if there are no further questions, I would like to thank you all for coming to the conference.